So traders, the gold, silver market, what a flash crash. I want to talk to you a bit more about that. Some things I've been telling you guys in the last few days, get ready for it. And also, I want to talk about the good old stocking market, what's happening right there, and also the reasons why I see some interesting things there. And also, I want to share with you a trade that me and my private clients recently did. Nice little, what I call a short-term cash flow generator. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders, before I do start, I am giving away free access to my trading course. You probably see on the screen right now. There's 4 phases that you need to know if you want to become good at trading. You got phase 1, which is like what I call your foundations. Phase 2 and 3 is chart reading trading systems, and phase 4 is like the what I call the X factor or the mindset. If you don't have all of these, if you don't have all of these 4 phases together, you're always going to struggle as a trader. Should be link in the description, guys. First thing in the description, or just go to johnsfreegift.com. Now, let's actually continue on here. So, for the last few days, I've been saying. So let's actually go to my YouTube channel here. I want to share something with you. All right. There we go. All right, so here is my good old YouTube channel. Here we go. All right, good old YouTube channel. And so I'm like this. I'm like this day right here, 4 days ago. I'm like, which way will it break? And this is the day I said, if it breaks down, we're likely to go down. So, and people are like, oh, what a genius, John. And it's like, I hope you guys, or 90% of you guys that watch this video, I hope you can see what I'm saying here, right? In trading, we wait for a bit of a confirmation that the market's likely to go in that direction, and then we hop on, right? We don't gamble, we don't guess. We go, okay, let's get into it now, and then we're likely to see this thing continue to move forward, right? Then I did, 2 days ago, I did a video saying, crash, it's just getting started. And oh, people cracked a little shit, right? Because I said, okay, which way is it going to break? Then we got the break. I'm like, okay, it's just getting started. So let's have a look at this over here. So if you have a look, I said that in gold, and I did a video on this day right here when we got the, right here was when I said through this situation, I'm like, okay, I don't know which way it's going to break. So it's 50-50 right now. But if we break down, we're likely to flush down. And I said we're likely to flush down to the support level down to here. So that's what I said there. And so then I did a video this day here, which was crash. It's just getting started. And then I did a video saying, you know what? It's probably like now we've got direction. We're now likely to follow through because once we break down, we're likely to go down, and exactly what we did. So yeah, baby. Yeah. Woo! I hope you guys listen to me. There we go, bumblebees. So there we go, guys. This is exactly what happened. So what happens now? I don't know, but that's that trade done and dusted. So I hope you guys are listening to me. So that's what's actually happening with gold through there. Possibly to actually see gold have a lot more downside to come. And you know what? Looking at all the mining stocks, we'll probably have a bit more downside to come. Overall, when it comes to these mining stocks, they're actually pretty weak. So a bit more downside. Again, the long-term guys, I'm a buy and holder of the gold mining stocks. Buy and holder, okay? So as the market dips down, I'm a buy and holder. And because I do see that looking at this is the weekly chart. Even if we do dip down through here a bit, I do see, even if we got this through here just a little bit more, I see this coming in a few years time frame. This may even happen this year. It may happen next year. I don't know, but I'm a buy and holder. But on the short-term basis, guys, we're probably going to continue down because we've got a bit of a flush down below this support level. And even the silver mining stocks, we're probably going to continue down more because there's probably a lot of support. There's probably a lot of stops below this level here. So there's probably a lot of stops that this market's going to continue down. So weakness is still coming, guys. Again, short-term weakness, but to me, I'm a buy and holder. How are you guys doing? And so patience is the key, right? Especially with a lot of these mining stocks. So that's what I'm seeing through there, guys. And also we got the good old silver flash crash as well too, right? Silver, same thing for silver. We've got the breakdown, and look where it ran to, almost right back down to the support level. So exactly what I thought was going to happen, exactly what I shared with you guys, and it's exactly what happened. So Bring it on. Now, looking at the good old stock market, let's have a look at this here. Then I'm going to share with you some trades that that me and my private clients have done. Let's have a look at the stock market. So I did I did a video yesterday, but I was talking about this here. Someone was saying that they're actually short this stock market right now, and because they think that that the market's going to collapse anytime soon, and it's going to be all over here. And here's the really interesting thing. I want you to understand the environment we're in right now is unlike that we've seen in a long time. And I think the last time we saw something like this was 1929. And what was that? That the government, the good old Fed, and good old all these other markets out there, guess what? The government and the Fed has created a situation where there's no other game in town apart from real estate that gives a good yield, and also stocks, right? So even with right now, I want you to understand the reason why I don't believe we're ready for a crash. I believe we're halfway through that melting up phase, or I believe maybe we're just getting started to see that big move up, because I see, to me, Dow Jones 40,000 Dow, S&P 500 5,000 target, Nasdaq 17,000 target by the end of this year. Now, I could be wrong. All right, I could be wrong. By the way, my long-term target, my long-term target on the Dow, meaning over the next maybe 5 or so years, is 60,000. Where are we right now? Right, up here, 60 to 65, but I say 60,000. I believe we're going to be up here by the end of this decade, guys. By the end of this decade, for you guys that buy and holders and just like to buy and hold for years and years and years and years, I believe we're going to see a 60,000 print by the end of this decade. Hey, what I see by the end of this decade, that could happen in 2 or 3 years. It may take a lot longer than that, but I see a 60,000 print. Over this, by the time this decade's finished, we're going to see a 60,000 print. So that's my ultimate long-term target. Today, a 40,000 print is my first target on there. Anyway, so let's have a look at this here. So for the markets here, I want you to understand about the foundations of what this market is built on right now. We know the Fed is all right. That's actually the the whole the Fed printing money and so on and so forth, right? We know they're still doing 120 QE every month. We know the interest rates are still down. They haven't actually slowed down the QE, or they haven't started raising interest rates yet. So that those two alone are not putting on any brakes at all when it comes to these markets. Now, it doesn't mean, when I say that, guys, we are going to continue in a bull market. We're going to continue seeing these pullbacks. Just because we get these pullbacks in these markets, guys, okay, just they see how we get these pullbacks. That's just the normal flow of the markets. But the overall trend, even on a sharp correction, is to the upside because of the breaks, the Fed, who is literally underneath these markets, and they've created a situation where there's no other place to go, hasn't even started to slowly put on the brakes. Slowly put on the brakes is them either A, starting to slow down the QE from 120 billion per month to maybe less, or start to slowly increase interest rates, maybe from 0 to 0.025, then 0.50, and then 0.75, So they haven't actually started to slowly do that. So there's no even slightly tapping on the brakes right now. So there's no reason for this market to go up on a fundamental level. Then on the other side of that, there's literally the bond market, which the bond market is so much bigger than the stock market. There's no yield there. And in some cases, it's a negative yield when we start to look at interest rates. Inflation. So inflation and bonds, there's now trillions of dollars coming out of the bond market into the equity market to chase a return. So we have that. And then on top of all that, now what we have is we have other countries like Europe that are negative, that they're getting out of Dodge, getting out of the European market, getting out of that there. And a lot of the money is coming over to America to try to chase a return. That's the environment we're in. So yes, we can get some jitters every now and then on the short-term basis when it comes to these markets. But the foundation of what this market's built under, That's why, guys, if you're trying to short this market right now, there is so much fuel underneath these markets that any short-term pullback in the market is bought up. I have been long this market, or me and my private clients have been long. I've been long the SPY for quite some time now, and I've been long the QQQs as of the breakout. As soon as we got this breakout, I'm like, okay, then here we go, and I've been long ever since. Me and my private clients have. Guess what? Happy days, right? Because we're not fighting the market. So when you have that, plus also on a technical level, we have what's an upward trend is higher lows, higher lows, higher lows, higher lows, right? So an upward trend. So 1, don't fight the market, higher lows. 2, 1, don't fight the market. 2, don't fight the Fed. And then suddenly 3, don't fight the world. Because what do we got? We've got the market in an upward trend. We've got the Fed saying, here we go. And then the world saying, man, we've got negative interest rates over here. We're going to start to flood over to America to try to get at least some sort of return. And so that's what's happening here, guys. And that's why we're in this environment right now. And that's where like trying to short this market. Yes, we can get some strong pullbacks and even some sharp sort of corrections out of these markets. That can happen, right? That's that short-term jittery. But the overall, if we did get that, that'd be a buying opportunity. If we got something like this on the S&P, that'd be a buying opportunity because then we're likely to do something like that. A bit of what I call a slingshot pattern. So I hope you can see, guys, that if you're trying to short this market right now, yes, we've got the biggest debt right now. Yes, the debt, we've got the almost $30 trillion of debt. Yes, I understand that. But do you know the interest payments? If you actually look at the interest payments, because the interest rates are so low, the interest payments right now, the interest payments on that debt is so much lower than it was back in the So back 20 years ago, the interest payments were so much higher because the interest rates were so much higher. Because the interest rates are really, really low, there's not a lot of confliction there. Now, if inflation continues to pick up and then the stock market goes boom, right? And then they have to start to raise interest rates, that's when it's going to start to create a lot of havoc. But until then, no, that's the reason why that's why the Fed's not putting on the brakes yet. They're like, I don't want to put on the brakes. The Fed always comes to the show too late. They're going to wait for inflation to go absolutely just nuts. And then they're going to wait for these asset prices to go absolutely nuts. Then they're going to put on the brakes, and that's what's going to cause the crash. So don't fight the Fed. Don't fight the markets. Yes, we can continue. Yes, we can get weeks and sometimes even months where the market has a pullback or does nothing like this for a while. That's just part of the markets, right? But the supportive evidence behind these markets, guys, is indeed to the upside, and that's the environment we created in. Now, moving into next year, we need to wait to see what the Fed does with the QE, interest rates, and then also we need to wait to see what Biden does with the taxes. Because if Biden does start to increase taxes next year, that's going to start to create a bit of a dampening fact on the markets. And that's the reason why I say, guys, from now through the end of the year, play ball with the bulls. Yes, we can get short-term corrections, but guys, there's a massive fuel underneath these markets. The reason why me and my private clients are long QQQ SPY, and me and my private clients have made a lot of money being long this market, especially individual stocks, Microsoft, Adobe, and many other stocks out there. There was one trade we did, I think it was a few weeks ago now, where we got in and the very next day, 140% return in one day trading options. Just a beautiful trade, right? So that's me and my private clients. And so I hope you can see, guys, that please don't, the purpose of me saying this is I don't want you to fight the market. You're not smarter than the markets. Wait for the market to tell you that it's turning over by understanding, what I've just talked about. Don't fight the markets, trend analysis. Don't fight the Fed. Don't fight the world, right? Just there's no break pudding right now. Okay, and then if you guys, do yourself a favor and go read Ray Dalio's Big Debt Crisis, the templates. You'll be able to see that a lot of stuff I'm talking about here right now, especially when it comes to the interest rates, that's the Fed, right? Interest rates down, asset prices up. Interest rates up, asset prices down. They haven't even started to slowly put on those brakes. But when they start to slowly put on the brakes, yes, by the time they actually do raise the interest rates, by the time they do say, you know what, oh my goodness, this is too crazy, guess what? Yes, the everything bubble that we see when it comes to stock market, bond market, and even the property market, right? Yes, everything bubble, and then we're going to see a crash from there. But that may be 6 months from now. That may be 2 years from now. I don't know. That may be we may see a massive continuation move on the upside until maybe end of next year. But that's why I say from now through to the end of this year, at least on this next time frame, this short time frame here, nothing but supportive evidence for continuation. So guys, don't fight the market and don't fight the Fed. All right, cool. Let me share with you guys a trade that me and my private clients did just recently, and we actually got out of it today. Some of my for a nice little short term, what I call EXPI. Here was the trade, guys. So I hope you guys are trading well. Me and my private clients are kicking these markets ass right now, whipping it. Right? We got in on the breakout here because that's why we have our trading system, and so therefore the market was doing nothing. We got a nice little breakout. Our system said to go long. We're in it for 1, 2, and then today was the third day, and then some of my private clients decided to hold on and scale out by using a scaling sort of stop technique, and I won't get into that. But some people decided to stay in, and other people decided to take it and use this as what I call a short-term trade, and they got 60% return in that time frame. So a nice little what I call a short-term cash flow generator trade. Just such a beautiful trade. So for you private clients that are watching right now, I'm so proud of you. And guess what? We're in some amazing trades right now, and there's going to be so many more amazing trades. So a message to my private clients: you continue working hard with me, and I will set you straight. I can guarantee you that. So well done, guys. Well done. Nice little short-term cash flow generator trade. We're kicking these markets ass when it comes to even with the QQQ and where we're positioned right now. Oh my goodness, guys. It's going to be an amazing finish to the end of the year. Anyway, guys, that's it for me today. Hope you guys had an amazing time. Guys, because you've just finished watching this video right now, you're the 3%ers. 97% of the people out there are going to suck dog's ass about these markets, and they're going to not do well out of the markets. And that's just frank, because they're simply all over the place like a bumblebee. But because you're watching it right now, you're the 3%er. So I want you to put in Fed on fire. Fed on fire. And the reason why I want you to put Fed on fire is because the Fed is on fire right now with zero rates and QE, right? So the Fed is on fire. Secondly, it's going to confuse the hell out of all these people that are watching this video, because most people won't watch the whole video to this point right now. They're going to look at the comments and say, Fed on fire, Fed on fire. What does that mean? What does that mean? They're going to be so confused. So, and that also shows me that you are a 3%er. So well done, guys. I'm proud of you for sticking around. And once again, guys, if you haven't done so, then make sure you go. If you need my help with understanding the chart reading stuff that I talk about, or the trading systems, go get that free trading course. Link in description, and I will speak to you real soon.